Is deflation really a bad thing? Deflation being the opposite of the ever-feared inflation, which is the general rising of prices. Deflation, on the other hand, is the general lowering of prices throughout an economy. Many people write off deflation as a bad thing, and I want to talk about how that is not always a bad thing. But before I get into that, if you're new to this channel, my name is Jack Duffley, and I cover a variety of topics as they relate to investing and personal finance. So if you like that sort of content, be sure to have a look around the channel, and if you like what you see, be sure to subscribe. So is deflation good or bad? Well, the answer is a rather disappointing, it depends. I recently finished law school, and this was the most common answer to just about any question ever, is it depends. Because there are nuances to things when it comes to law, when it comes to policy, when it comes to economics. Things are complicated, and there are a lot of moving parts. Now, in a deflationary environment, you have to ask, why are prices falling? Because there's really two main types of deflation to determine whether it's really good or bad. One of those would be deflation as a result of productivity growth. That is, people are getting better at producing things more cheaply, so the cost of goods decreases, and you get competition and all the things that pull down prices more naturally. The other type would be monetary deflation, where money is actually destroyed via debt destruction or actual currency destruction, which is a little more rare, but that's the kind of deflation on the monetary side. And I think that's more in line with what people think of when they think of deflation. They think of negative economic growth, they think of debt bubbles exploding, they think of the monetary supply decreasing and that it's harder to actually get money to fund business operations and all that great stuff that drives an economy forward. And certainly in the last 100 years or so, that is often a major component of big crashes, if not throughout much of history. Usually there's a lot of debt involved, and then that debt is destroyed, which inherently is deflationary since money is being taken out of the system. The debt, after all, is just an entry on a piece of paper. The bank is loaning it out to people, and if the borrowers in this case are no longer able to pay the loan back, the bank ultimately has to close out the loan, and then that money is destroyed. It's taken out of the economy, the debt is gone, however, the harm is still there. While it gets back up on its feet and recovers from those losses, the bank is probably going to be less likely to lend out, at least at nearly the same favorable terms as before, and that means that potential borrowers and businesses would have less access to money, and therefore it'd be harder to get that growth going again. That's a deflationary spiral with the monetary side in mind. Another subset of deflationary monetary policy would be interest rate hikes, where the Federal Reserve or whatever central bank it happens to be somehow tightens its monetary policy to where interest rates will rise, making it more expensive to borrow and potentially collapsing asset prices at the same time to where the current borrowers who might be relying on those asset prices would then go bust because they'd be underwater because the debt value would be a lot more than the actual asset value depending on how severe the interest rate hike was. Because that makes it so that new borrowers have to borrow at a much higher interest rate and they're not going to be able to pay as much for the same thing that they might have been able to pay more for if interest rates were lower like they were before. I would definitely consider monetary deflation the much worse form of deflation since it's typically a sign of very hard times that the economy is going through, making it much harder to borrow, and generally is what happens when debt bubbles burst and economies go through probably some of their harshest times throughout history. But what about productivity deflation, which is what I would definitely call the good type of deflation? Since a little bit of deflation in an economy when it's a result of productivity growth really shouldn't be a bad thing. The natural course of things in an economy is not inflation. Prices aren't naturally going to rise because people get better at creating the things that we know how to create, and we get better at improving the processes, improving the materials, whatever it is. Now, of course, there are exceptions. Sometimes you might run out of a resource and that could lead to a short-term shock while we look for some sort of substitute. There are shorter-term sort of anomalies there that are definitely worth noting, but in general, quality of life has vastly improved over human history, not because prices have grown in nominal terms, but because the actual value that people can create has increased. The intrinsic value of something, our ability to create advanced things and put things together to create some sort of synergy, all the great inventions that we've seen throughout history. And that is a continual process. Just in the last few years, we've seen major improvements in tech. We've seen major improvements in genetics and also pharmaceutical technology. Look at the vaccines that rolled out super quickly. That would not really have happened many hundreds of years ago. There's just no way without the current technology that we have. And that is definitely a good thing. And now the things that were produced 100 years ago are going to be a lot lower quality compared to what we can produce now. And because they're lower quality, they are going to be cheaper, or we're going to be better at producing the same level of quality, and that would make it cheaper as well. And that's because of economies of scale and expertise and productivity growth. Now that part's pretty obvious. I don't think anyone's really going to argue that we're somehow worse off than we were hundreds of years ago just from a quality of life perspective. We're definitely much better off in many different areas of our lives. But many people would argue that net deflation, where the general level of prices is actually lowering over time, they would argue that that's a bad thing because it encourages savings, and saving is not good for an economy that's trying to grow. That's the main argument, since you want people to spend that money into the economy and encourage businesses to take risks because consumers will consume the things that they produce. At the same time, with an inflationary environment, people are going to be even more encouraged to spend because the prices of the same thing that they would want today is going to be going up. So you're encouraging people to spend when they otherwise might save and not spend because they're expecting the price of that thing to go down in the future. It's an incentive argument, essentially. However, one thing that definitely ignores is the fact that savings are not some sort of black hole where the money just goes and disappears. Instead, they're probably going to put their money in a bank, and the bank is going to lend that out to whoever's producing the things in the economy, to business owners, to entrepreneurs, to people who are making the things cheaper for everyone else. And keep in mind, just because the consumer prices are decreasing, that doesn't mean that the input costs aren't also decreasing, so it's a net decrease across the board. The point is, the money's not going into some sort of pit, it's being relent out into the economy, ideally towards the more efficient producers, one would think. However, at the same time, that sort of system would probably discourage the use of debt at least somewhat, because borrowers right now, in an inflationary environment, are very much incentivized to take out fixed rate debt or low interest rate debt because they believe that inflation will outpace the actual interest rate that they're paying on that money. So in a sense, the inflation is making it like free money, the free debt. The inflation is greater than the interest rate, or it's otherwise providing some sort of discount. However, in a deflationary environment, that borrower might have to be a lot more careful. Not that you shouldn't be careful in any event with that, because the value of the thing that the person is buying on debt might not actually increase in value. In fact, it might decrease in a deflationary environment. However, again, the price of everything should be decreasing over time in a deflationary environment as we get better at producing those things. So borrowers are definitely not nearly as encouraged to take out new debt, which some people would argue is a bad thing. However, it's kind of a double-edged sword, since more debt certainly adds more risk to the system, but it also arguably increases the amount that an economy could grow in any given period because there's just more money moving around. There's more money creation through debt, but then again, that can lead to more brutal deflationary spirals when that debt is destroyed if too much of it is taken out at once. So is deflation really a bad thing in itself? I would definitely argue that sometimes it is, but other times I would definitely say it's not. With productivity growth and things getting cheaper for everyone, not only consumers, but for producers as well. And we're producing more things at a lower price and a higher quality. That is exactly what we want out of human innovation, and that makes everyone's lives better. However, there's certainly something to be said about pursuing a policy of low inflation that wouldn't otherwise naturally occur, but does because more money is printed and debt is free and easy to grab, so there's a lot more inflation there. There is something to be said about that driving more innovation and more spending as well, but it's definitely at a cost in that you have more large-scale deflationary spirals when inflation gets a bit out of control. And that would be on the monetary deflation side, where it's very painful to go through. Anyways, that's all I've got for today. I'd definitely love to get your thoughts in the comments below about the inflation versus deflation debate, since there are merits to both arguments, and definitely would love to get that conversation going below. But otherwise, if you like this video, definitely like it, since that would help the channel out a lot. And if you like this sort of content about investing, personal finance, economics, then definitely subscribe, since I put out new videos every single week and wouldn't want you guys to miss out. But until next time, take care.